I spent 12 years behind the glass at a high-volume dealership. I've watched fathers unknowingly sign away their kids' college funds, and elderly couples get packed for thousands they didn't owe. If you've ever sat at a cheap desk and initialed a piece of paper with 4 boxes scribbled on it, you weren't negotiating. You were being mugged with a calculator. By the end of this video, I'm giving you the one-sentence kill, a single, highly guarded phrase that forces the manager to drop the act and show you the real numbers, or risk losing your deal entirely. That piece of paper is called the 4 square. It's a psychological tool designed to break your focus. When the salesman abandons you to go talk to his manager in the tower, that elevated glass office where the real strings are pulled, they aren't fighting for your discount. They are desking the deal. They are plotting how to shuffle your money between the trade-in, purchase price, down payment, and monthly payment. Why do they desperately want you to focus only on the monthly payment box? Think about it. 3, 2, 1. It's not because they care about your household budget. By locking your eyes on an affordable $450 a month, they psychologically blind you to the fact they just dropped your trade-in value by $2,000 and secretly extended your loan to 84 months. If you've ever been trapped in that little room for hours staring at scribbled math, comment the word box below so I know who survived this grinder. The house's gross profit never changes, it just shifts quadrants. You walk out thinking you won, but you just bought a $20,000 car for $35,000. It's a street shell game played with your debt. And right now, in 2026, falling for this illusion is financially fatal. So, tell me this. How does a $400 approved monthly payment magically swell to $440, even when the sticker price never budged an inch? Behind the glass, we call this payment packing. It relies on a little weapon we call leg. Think of leg as the dead space in a shipping box. If the bank actually approves your loan at $400 a month, but I walk out of the tower and quote you $440, that $40 is my dead space. And I'm going to stuff that space with pure garbage. Let's test your instincts. Why does the finance guy act like he's doing you a massive favor by tossing in free paint protection and gap insurance? 3, 2, 1. Listen to me. He isn't sweetening the deal, and those add-ons aren't free. He is stealing your leg. He just crammed his highest commission back-end products into that artificial $40 gap. He makes it look like it's all included. If you've ever found a mysterious protection package buried in your final paperwork that you swore you didn't ask for, drop the word packed in the comments right now. That packed payment drains your actual wealth. You're bleeding out $480 a year for phantom protection, literally financing the manager's next vacation. And once they've successfully bloated your loan, they'll use a very specific, calculated lie to guarantee you can't escape it. Ever been told you absolutely have to wait 3 months to refinance? That is the biggest, dirtiest lie in the F&I office. Let's play a little game. Why does the finance manager get visibly nervous if you mention paying the car off next week? Is it because it hurts your credit score, like they claim? Or is it a massive prepayment penalty from the bank? 3, 2, 1. Neither. It has absolutely zero to do with your credit or bank rules. Most auto loans don't have prepayment penalties. They lie to your face strictly to protect their own paycheck. See, when that manager secures your financing, the bank pays the dealership a fat commission. But there's a catch. If you pay off that loan or refinance before 90 days, the bank snatches that commission right back out of the dealer's pocket. In the tower, we call this a chargeback. It's a financial slap in the face to the house. So when they look you in the eye in 2026 and swear you must wait 3 to 6 months to refinance, they are literally tricking you into paying hundreds in extra interest just so they don't lose their cut. You're bleeding cash to protect their bonus. They'll willingly chain you to a toxic loan just to avoid a chargeback. But why is that bank commission so high in the first place? How did your loan get so expensive before you even signed it? It comes down to 2 numbers you'll never see side by side. Have you ever wondered why the dealership's interest rate is magically 2% higher than your local credit union right now in 2026? Think about it. 3, 2, 1. The answer is the buy rate. They'll sit across from you, shake their head, and say the bank looked at your credit score and demanded a 7% rate. That is a flat-out lie designed to protect their spread. Your credit actually qualified you for 5%. That 5% is the buy rate. It's the raw, wholesale number the lender secretly hands the dealer. But you never see that number. Before they print the contract, the finance manager silently tacks on an extra 2% to create the sell rate. That spread is pure profit for the house. On a standard 72-month loan, that invisible markup drains thousands of dollars straight out of your checking account. You are handing over your hard-earned cash for a convenience that actively bleeds you dry. They aren't doing you a favor by finding you a lender. They are a middleman skimming off the top of your debt. They hold all the cards as long as you play their financing game. But what if I told you there's a way to completely paralyze this operation? The solution is taking the math out of their hands entirely. You never negotiate a monthly payment. You demand the OTD, the out-the-door price. Let me ask you a question. When you buy a laptop, do you ask the cashier to hide the total cost and just tell you a monthly fee? No. So why do we do it for a $40,000 asset? 3, 2, 1. Here's the reality. You think negotiating is about lowering the sticker price, but the price doesn't actually matter to the dealer. The only thing that matters is controlling your psychological focus, so they can bury their profit in the financing terms. If you've ever been kept in a showroom for 5 hours just to get a final number, drop the word hostage in the comments right now. By securing your own financing beforehand and demanding a strict, itemized OTD sheet, you eliminate their leg and crush their rate spread. You strip away their ability to pack the deal, which brings us to the one-sentence kill I promised you. When that salesman slides that foursquare across the desk, you put your pen down, look them dead in the eye, and say, "I don't care about the boxes. Give me the itemized out-the-door price, including all taxes and fees, and show me the buy rate from the lender." That's it. That one sentence signals you know the game. Suddenly, the math magically stops moving in their favor. See, the whole dealership model is built on the grind. They want to wear you down. They keep you hungry, tired, and confused until you're exhausted enough to sign literally anything just to go home. The moment you show you aren't afraid to walk away, the moment they realize you understand their leg and their spread, the power dynamic violently shifts from predator and prey to a simple business transaction. The math is bad, but trust me, the add-on list is worse. In the next video, I'll show you the 3 service contracts you should never sign, even if they offer them to you for free. They aren't selling cars, they're selling debt. Don't be the one paying for their Christmas bonus.